A bear market in stocks just began, and the newly released inflation figures showed that the Federal Reserve's plan to slow inflation in May had failed. While the possibility of a recession is getting priced into the stock market, in this period of high uncertainty underway, right now is the best time to plan for the future. With the stock market in bear territory, it's too late to sell and avoid taking a big loss. But it's not too late to plan, to position yourself for the future beyond the inflation crisis of 2022. This is especially true for pre-retirees in their early or mid-60s and recent retirees in their mid to late 60s. Failing to plan closes your eyes to opportunities designed to make financial transitions more comfortable, less stressful, and more realistic. Over the next 6 months, the economy indeed could fall into a recession, and a recession could last 6 months or a year. The Great Recession of 2008 was an 18-month downturn, a long and deep recession by historic standards. But the Great Recession followed the global financial crisis and bursting a mortgage debt bubble. Though inflation is a serious problem, it's not an existential threat to the economy. How the inflation crisis of 2022 ends hinges on what the Fed does in the next few weeks, and no one can reliably predict what the Fed will do or how it will impact the economy, much less stock prices. What is known is that the Fed will not allow inflation to become anchored in the financial psyche of the nation, even if it means hiking lending rates so high that it tips the economy into a recession. Recessions in recent history typically last 6 months or a year, and then a recovery and expansion occurs. Meanwhile, should energy prices, the main culprit of the inflation crisis of 2022, continue to rise, U.S. domestic oil and gas production could be ramped up. To be clear, once the European Union's ban on Russian energy imports takes full effect at the start of 2023, U.S. domestic oil and gas production could be ramped up to fill the demand from Europe and end the oil and gas shortage. The point is, now is the right time to position yourself financially to ride the next economic recovery. Imagine it's 2008, and the 10.5-year-long economic expansion and bull market has not yet unfolded. An investment in the Standard & Poor's 500 stock index quadrupled in value since then. While past performance is not guaranteed to be repeated, the United States stock market has increased in value by an average of about 10% annually for nearly a century. At this inflection point in history, ask yourself, where do you want to be financially in 3 or 5 years? Do you want to live in the same place? How much do you expect to save or spend? What do you hope to have accomplished? What do you want to be different? Let us know if we can help you find the answers.